Hey guys, Stockaholics, I appreciate you guys being here today. It's been a few weeks. I've suffered from both some motivation issues as well as some issues involving not knowing what the heck to talk about. But I think at least one of those has been cleared up recently, whereas I think there's a lot of things I would like to talk about in the coming weeks. Some of those ideas that I'm thinking about making videos on are tankers, of course, which I know a lot of you guys are interested in, oil, and in particular Russian oil, which I've been looking a lot about, which I've already invested in for several months, but maybe I would like to formalize my thoughts on that into a video. And another involving kind of scummy payday loan kind of credit companies. So if you're interested in any of those three kinds of content, be on the lookout for those. But of course, today, how could I not talk about FOMO? And today we'll be talking about FOMO everywhere, but not a drop to drink. I've seen a lot of people talking about recently all the things that have happened within things like GameStop, Bitcoin, Dogecoin, whatever, right? You've seen it all over the place. There's these hyper bubbles everywhere you look. I think that I have some perspective that I hope some people would find useful, that I think is different than some of the stuff that you might have heard before. All right, well, here we go. So in the top left-hand corner, we have something called Gamestop. Very interesting company, I know. They're a brick and mortar retail store. They sell video games. They've been doing fantastic throughout this pandemic, if you couldn't tell, by their massive parabolic moonshot movement that would resemble something that looks like crypto. Similarly, we saw something called AMC, which, by the way, I dabbled in just as a small meme. Very small gamble kind of a bet. And make no mistake, that's what that was. It was a pure gamble. There was, I don't believe that I had alpha on that, but it's something fun to do. And then recently, we saw this last little thing where Dogecoin went, had that similar sort of movement where it just went exponential from several 100%, I think peaking around 8 cents from an initial point of less than a cent, right? We can see here. So there's been a lot of crazy things going on, and we're seeing this is almost a trend here, right? And one of the next trends that a lot of people are anticipating in is kind of silver. And I don't have any real thoughts on that, but I do have kind of an anecdotal story that I like to share. I have a friend. I kind of talk to him occasionally about, my interests in stocks over the past several months, and heard from him occasionally. Recently, before I was going to work one day, he messaged me during the craze of the GameStop shenanigans, and he told me that he spent $4,000 on GameStop stock. Weeks earlier, he said he was interested in learning how stocks work. So within a period of, I'd say a few weeks, he went from, I don't know, maybe I'll invest some money into stocks, to going full FOMO on GameStop. I will say he asked my opinion on what he should do, and I said, I don't know, make your own decisions. It's your money to lose, not mine. And I'll say that I had no idea whether he won money or he lost money. He never got back to me, and he never told me. All right, so one of my perspectives, I guess my lens on how I'm seeing a lot of this stuff recently, is through a lens of what it's been like for me to play poker in the past. And I'll share you some of the ideas that I have while watching all of these crazy things happen before my eyes. And here are some of them. So I think one of the main ones that I think that you guys should be aware of for all of these things is that for every winner, there's going to be a loser. So when we're looking at a stock like GameStop, I call it GameStock a lot. I know I'm not the only person. Let me know in the comments if you do that too. But for every winner, there's a loser. So let me read this. You'll hear a lot about winners. You'll hear about the amazing trades that they're making, that winners will often believe it was skill that made them money, and they'll shout from the high mountaintops and let you know how incredible their trades were and about their intellectual genius. Anybody that has made money getting into this FOMO train And I don't know if we can accurately call it anything but. We'll be very happy to let you know how much money they've made on this stock. I think if you've listened to the people that have lost money, I think you might look at it from a different lens, or a different you might hear a different story. Losers will not acknowledge their failures were their own fault. Their losses are held quietly to themselves. Often what you'll notice is when people get involved in these kind of FOMO trains is that they won't talk about them losing money. If they put $1,000 into it and took out 500, they may not share that with you unless you're very close to them. Often they believe it was someone else's fault. So one of the trends we're looking at lately is that we're trying to blame Robinhood, right? Hey, it's Robinhood's fault because they're limiting trades. It was the hedge funds. They're colluding to rob the the investor, that we'll call him, or that the whole game is rigged. And I wouldn't suggest that any of those last three things are completely false, but I would suggest that they're an inevitability of this process. Yeah. But what you're looking at here is why I made that video a few months back comparing the stock market to poker. It's the same thing. Now, I do think that there is a possibility that a very small minority of these successful moonshots were that were involved in kind of the FOMO train did have some alpha, where they did have some advantage against the market. I don't think that there were many, though. For the most part, I think most people were just purely gambling here. And I think most people don't realize that they were gambling. And this is kind of what's great about poker and what's great about the stock market, is it's an illusion where people think that they have some kind of skill where often they don't. Okay, so if you're a normal person and you didn't get involved in GameStop and you're like, man, what the heck, everybody around me is getting rich, don't feel bad, because this is, we're going to look at numbers for a little while. And I think this could be a little confusing at first, but it's intended to be. And if you can understand a little bit better, you are going to be successful, or at least more successful in the long run. We're going to be talking about something called variance and another concept called bankroll management, which I learned from poker. And I want to start, I guess, with this question here. And that is this. If you wager 100% of all of your money on a trade, or what if you do that? And let's say that every trade that you come up with, whether it be GameStop, whether it be AMC, whether it be, I don't know, anything that you think you have an advantage on, and you say, this is going to go up. It makes sense for me to go up. And you wager 100% of your money. And you kept doing that every time, no matter what idea you had, what would happen? Okay, so what you're looking at here is a simulation, and I'm going to put a link for this if you guys would like to play with this below. And what we're looking at is 20 samples of over 100,000 hands in poker, and we're looking at a winning player. So this is a player who has an advantage over other players, and in this case he has a 5% alpha, or a 5 big blind advantage over the pool. He's winning 5 big blinds. You'd have to know a little bit about poker to know what that means. We'll just say that he's 5%. He's got an advantage of 5% over most players, right? Including the rake. And in this example, you're going to see this black line, right? And what this black line represents is an infinite number of trials. So let's say that you have this 5% alpha on everyone else. You're 5% better than everyone else in the market. This is what your advantage line will look like if you run this simulation an infinite amount of times. So let's say throughout your lifetime, you have 5% advantage and you maintain that throughout your lifetime. That would represent this black line. You will be that much more successful than other players, right? But that black line doesn't necessarily represent reality. And that's why the game is beautiful of both poker and I believe the stock market, is that reality doesn't necessarily fall in line with this black line. Rather, that's more the mean of all trials. So you can see here, this red line is what might happen if you're an amazing player, but you just have a terrible streak of luck. Let's say that you come up with a system that is going to win in the stock market or in poker, and it's great, and has a proven success. there's going to be times when you're going to lose. And let's say that you are wagering 100% of your bankroll, which most people in the stock market don't have any concept of, this concept of wagering all of your money. If you wager everything on every trade, even if that trade is going to net you money, it's a winning strategy, ultimately, no matter what you do, you will go bankrupt because luck will eventually turn, right? Now, on the flip side, you could be a dumbass. Look at this light blue line, right? Now, in this case, we're talking about a winning player, I know. But imagine that you have somebody who is a losing player and he's got a negative 5% alpha on the environment, on the stock market. He's a big dumbass, which I would suggest most players in the stock market currently are. Now, if you have this light blue line, you'll notice there are scenarios where this player makes a shit ton of money. He runs like absolute god and he can do amazing. Now, what a lot of these players do is they don't tend to learn that they're lucky. They don't tend to they don't tend to realize what is happening. They think that this blue line, this is me. This is my idea. This is what would happen 100% of the time. There's no such thing as variance. They don't understand this concept, yeah? So I wanted to mention this because I think that alpha does exist in this crazy hyperbolic bubble environment that we exist in. But I don't think that most players I don't think most players get it. So maybe let's say, for example, that you think you figured it out. You notice that there's an 85% correlation between, I don't know, the amount of posts and which FOMO bubble is going to come next. So let's say Dogecoin, there's this form here and you can correlate it with very high frequency that, holy shit, if I've discovered a pattern here. Let's say you got it, but you decide to wager 100% of your money on that trade. You might be correct. With an 85% consistency, eventually you're going to go bankrupt, yeah? Now, let's say that you've solved it. You understand. You've noticed a pattern that nobody else has. Let's say you can correlate something to something else, and you know that Dogecoin is going to go up, or with a very high frequency, right? The point is, no matter how sure you are of your wager, there should always be the inclination in the back of your mind that things could go wrong. That is why when we're playing poker, or if you're a trader, right? And I'm not. I'm gonna let you know right away. But if you are, there's no reason that you should be wagering an amount of money that is going to disproportionately either make you rich or make you poor. You should be wagering a consistent amount of your money every time. So let's say instead of wagering 100%, where there's a 100% guarantee that eventually I'll go bankrupt, and instead you've done the opposite, and let's say you're wagering 1% or at most 2% of all of your money, this variance here is not going to affect you in the same way that it would as if you're wagering all of your money. There's going to be times when you're going to be losing money with your proven idea set or your proven system. And there's going to be times where you're losing money, but none of that is going to affect you as long as you maintain percentages. I think ultimately what I'm trying to say here is that if the chance of somebody having both an alpha where they've discovered an edge on the market and simultaneously know how to manage a bankroll to effectively manage that in the long run in this environment, I would say that it's a very, very, very small, minute portion of the amount of overall players in the market at this point. I think most people are degenerate gamblers, and I think that there's an illusion that they're not. I think what I'm trying to say is that if you combine the fact that most people are not going to be talking about their losses, and you combine those winning amount of players, which I would argue are ultimately going to be a smaller pool than losing players by far because of this concept of variance. I think that you should be confident that you don't need to be getting involved in this crazy system that I don't even want to call it a system, crazy phenomenon that has existed recently. So I argue a very small minority of traders understand variance. Now, I'm not saying that traders are idiots. I think that there are a lot of intelligent traders out there. I'm not going to say that they can't have alpha on the market either. But I'm going to say that it probably doesn't exist in these kinds of hyper bubbles. And if it does, those few people that do have that alpha, those aren't the kinds of people you should be jealous of, because they know a lot of stuff. I'm not saying that there aren't people that can't play GameStop or any hyper bubble profitably. I'm saying most people, most, are ignorant, and that even those that probably can play those kind of profitable hyper bubbles probably won't. Let's say that they did figure out an alpha on the market. They won't, because they don't understand how numbers work. Yeah. So if you have a 5% alpha on a market, that was that question I brought up before. And if you wager 100% of your money on that every time, you're always 100% of the time going to go bankrupt if you wager everything that you've got on every trade. So this is something called the law of large numbers. The law of large numbers in probability and statistics states that as a sample size grows, its mean gets closer to the average of the whole population. And something else to consider when you're thinking about these bubbles, at least in a financial context, is that the large of law numbers indicates that a large entity which is growing rapidly cannot maintain that growth pace forever. When we're thinking about that in terms of the kinds of clear bubbles, there's some people that probably disagree, but of Tesla or those other things that are based on real fundamental things, but are again another symptom of that kind of FOMO thing. Ultimately, these things end back in the mean, and I've showed you this in a few videos before. Yeah. But what's great about this law, if you understand it, is that the law will weed out bad players. The people who have no edge will ultimately, those blue, like we saw with that blue line that was way above the mean, if people think that that's them and they don't actually have an edge, those people will go bankrupt eventually too. And the people who do not manage their risk properly, which I would argue is a very significant portion of the people, at least based on my anecdotal stories. I guess I mentioned there's that guy who wagered 4,000, but I'd also like to say there's another person who I know, and this is kind of why I'm talking about these wagering 100% of your bankroll kind of ideas, because I have a friend that's actually doing this. He considers himself to be a trader, and he wagers all of his money and he makes money, and every time that he gets paid, he wagers all of it on these kinds of stocks. So, and again, maybe that's not representative of everyone, but I think that it is representative of a lot of people. And I think there is a huge amount of people that have no idea of, or even have heard the idea of variance, much less understand what it means. Now, the bigger thoughts that come to my mind when we're looking at all of these things, and for myself, I'm not looking to make a significant amount of money off of them. I did wager on AMC, but I'm probably not going to do that again. It was just something fun to do with the small amount of money for me proportionally, right? Because I do understand the concept of variance, and I wasn't sure that I had alpha, right? But the question that comes to my mind is this a sign of worse things? Recently, or over the last couple of months, I've been looking at the arguments for both inflationists and deflationists. And one of the questions that comes to my mind when I look at all of this is that, are we in deflation or are we in inflation, right? Now, most of the time, at least until recently, I don't necessarily want to say that I've changed my position either, but I've strongly been in the deflation camp. But I understand the argument for inflationists. And one of those inflation arguments is that people lose confidence in money. And one of the questions that I have to ask myself when we see all of these things, when people are just putting their money in dumbass shit, is, are people losing confidence, right? Like, are people saying, you know what, if the system is not a thing anymore, what's the point, right? Like, why would somebody in good conscience put thousands and thousands of real money, if they held value in that currency, into a GameStop of all things, into Dogecoin of all things, right? And I have to ask the question, are inflationists starting to be right? Are people losing confidence, right? And the more I think about it, the more I start to think about what some of the stuff that we see in America as a whole, right? And one of the questions that comes to my mind is, what binds Americans together? well, why are we still a society, right? Is it our race? Like if we look at a country like Sweden, or we look at a country like China, where there's a demographic of people that are held together, and we compare that to the United States, well, that can't be true. There's not biology that holds us together. Is it our common values, that hold us together as Americans? Well, I don't think so. I think there's half of the population that has one ideology, and I think there's another half that holds another, right? Well, is it the Constitution? I don't think that anybody cares about a document that was written hundreds of years ago. And I guess what we're looking at recently is the last idea is, well, does money hold us together? And if what we're looking at is supposed to be proof of that bond somehow, then absolutely that could not be the thing that's binding us together either. And it brings me back to this idea where people are trying to go FOMO on silver. And it's like, if you don't hold value in the currency, I don't mind you going all in on silver. It's a hedge. It's a real thing. It's something that's physically been proven over thousands of years to have some sorts of intrinsic value to human beings if you want to buy it. But people aren't buying it for that reason. They're buying it for the same reason they're buying GameStop. It's just pure FOMO, right? But I guess, when I'm looking at all of this stuff, I don't hate the concept of insurance. When you want to buy silver, and realistic, I think probably a better investment is starting to become gold again, just because it's down relative in price to silver. Because again, what we said is with the law of large numbers, the mean tends to revert to the mean, but it's not an investment. It would be an insurance, and I don't hate the idea of insurance based on all the things we're looking at, right? It really does, ask a bunch of questions, and these are questions that I think that are worth asking. Now, I didn't necessarily want to leave that video on a dark note, but perhaps something more bright and something that could perhaps guide you in something more motivational. And that's motivation is definitely something I myself could probably use. But let's say that our $100 bills are worthless and that they're just meaningless paper. Well, perhaps that we could seek value in some other way in our human existence, and that perhaps service to others is the rent you pay for your room here on earth. That's a quote from Muhammad Ali. And I'm not necessarily a religious person, but I don't necessarily disagree with this ideology. I think that there is intrinsic truth in this thinking. I think that kindness is an amazing investment, and although money might be debt, and perhaps it is money that cannot be repaid, kindness, in my experience, will often be repaid. And often that kindness might be repaid by people you haven't even given it to directly. If you give kindness to someone and they find value in it, often that person will repay that kindness to someone else. Based on my experience, like I said, I think that it has truth in both religion. But I like to say that I teach science. I believe in something that's there's evidence for, and that I honestly believe that there is evidence to suggest that this kind of economic reality, this economic truth of kindness, well, there's a basis for it in any kind of ideology you have in life. I think it's truth.